Welcome, everyone. Today, we're diving into the world of insured mortgages. If you're looking to buy a home with less than a 20% down payment, this is for you. So, what exactly is an insured mortgage? It's backed by one of Canada's three major default mortgage insurers, CMHC, Sagan, or Canada Guarantee. Mortgage insurance is required by law when your down payment is less than 20% of the home's purchase price. This insurance protects lenders if a borrower defaults. It allows you, the buyer, to enter the market with a smaller down payment. That's a game changer for many potential homeowners. Now, what if you have a down payment of 20% or more? In that case, your mortgage doesn't need to be insured. If you already own a home, your mortgage might not be insurable based on your current loan-to-value ratio. Now, let's discuss some exciting changes coming to insured mortgages. As of December 15, 2024, the price cap for insured mortgages will rise from $1 million to $1.5 million. This change is aimed at making homeownership more accessible for everyone, especially millennials and Gen Z. This increase is especially beneficial in high-cost areas like Toronto and Vancouver. By raising the limit, more middle-income families can qualify for a mortgage with less than a 20% down payment. It's a significant step toward achieving the dream of homeownership. Understanding insured mortgages is key to navigating the Canadian real estate market. Thank you for watching. Like, comment and subscribe for weekly videos on Canadian mortgage and real estate trends.